the guys too much. Oh my God. Jose, what are you doing to that man? Neil? I know why this is happening. All right. So let me explain. All right. I'm going to explain this reversal trade and how it is the same thing that I have just been teaching you guys. All right. Is everybody with me? All right. So we had higher time frame targets, right? But let's start from the higher time frame. It is very, very, very difficult for 24-hour floors to get broken intraday. Very hard, okay? In fact, more times than not, you're going to reverse. So let's start with that. So let's open up today. Price opens up here with empty space leading to the 24-hour 3 candles that we've already exhausted. All right. So for that, we need to gap above them. We would need price to close up against or just on, and that would allow price to just gap up, right? That's where you want price. You want a solid candle close at or as close to as possible. Even this, right? You don't close at, but what you retested up above. So if we, wick down again and then go green and we're green inside of that wick, yeah, for sure. So the concept of this short started on the 24-hour with just simply looking for a potential price rejection off of a 24-hour floor. Very simple, okay? Translating that down to the lower time frame, the floor is 256.92. Hot, right? So I'm in a call. I'm in 257 calls that I swung from yesterday that I had added to, and I'm getting the last pump. This works for everything. This works for everything, dude. What I'm teaching you is, obviously it's going to be its own case, but yes, it works the same way. So I'm at a call, right? And I'm heading to my target. And I mentioned to everybody that as we reached that target, that I was going to be potentially grabbing 249s first. And then we also looked at 254s. And I'll explain now that now that you got this, understand this concept, right, of why I was looking at that target on the 24-hour time frame. So hardest time frame to reclaim something. All right. So there's that 256.85. Price escapes, right? This is where fake outs occur. I know some of you guys have asked me, and I have told you that most of the time, 24-hour fake outs or fake outs occur when you are trying to grab higher time frame 24-hour floors, ceilings. That is when you will get that dip and rip. All right. Is this a reversal punch? This is a punch down. So right here, right, we got everything to make it a box, but on the 5 minute, it's especially clear, which is where I was hanging out. All right. Now, from that example I just showed you on the cues, right, hopefully everybody saw, price, which is again fighting with this 24-hour level, it serves as a point of pretty much nasty rejection. Price moves up, hits 257.60. I actually sold my contracts right before I hit that on my 257 calls. And that's where I speculated on 254s. Now, you again asking me, probably going to ask me, why did I grab 254? Empty space. I'm speculating on the punch down. Price goes to cost basis, bounces, and sits flat up against that 256.71. So I am looking, right, for price to hold and show that buyers do not have what it takes to bounce that out. 3 candles pass. I grabbed a few more contracts. Price goes to cost basis, doesn't respond, does not respond, and then we got hit, right? Price goes first here. I think it was off these wicks. Yep. Wicks down, pulls itself back up above cost basis, and then chopped us the rest of the day. But the short was taken off of a drop down, pass the baton to sellers, right? Or if you flip it upside down, a very simple punchback. Does this not make sense, or does this make sense to everybody? I have everything I look for: empty space, structure, box to box, I've got price leaving and price returning and grabbing and pushing and breaking the overhead cost basis and pushing up, right? Or in reality, right? Obviously, the other way around. I just had to inverse it on my trading view and it became so much clearer. Flip the chart upside down, guys. There's nobody who's going to come and slap your hand and tell you no. If it is clear, it's clear, right? And now we have a box here. Kind of makes me feel like cost basis might be there. But anyway, um, all I, yeah, that's right. Yeah. Okay, I get that. But did you get assure you didn't get faked out? It already did fake out into and above a 24-hour level just to get pulled back down underneath that same level. So what should have happened here, folks? You pulled back fast, you should have bounced here. And if you didn't bounce here, you should have bounced here, popped right back up, seen it build, and try to go for that high. Does this not make sense to anybody? I will. We are going to go through this until you get it. I swear to God. Everybody has to get this. So ask now, please. Let's do it one more time. Are you serious? I'm not mad. No. Okay, so let me split my chart. This might help. And let's get rid of everything. I'm gonna do this again. We got to get this because this is the simplest part. Okay. Now watch this chart over here to our left. All right. Ready? Everybody pay attention. Price opens up today above the previous day's candle with a big drop in front of it. Empty space. Right? 24-hour empty space. And the green candles up above would serve as the most logical target, which is what we talked about yesterday. If you guys remember this correctly, right? We talked about 257 being the possible retest area. Does everybody understand this? Just give me a thumbs up or something. I want to know that everybody understands this. I'm going to ask you every single time we go through each step. Everybody understands this, right? You have empty space and a floor to go and touch. Got it. Okay. So, and again, knowing how we respond to 24-hour hour levels, right? It's very clear that you're going to get a reaction. Okay. So we drop down to the 4. Excuse me, the 2. Price has opened up inside of the box, coming off the floor with 2, 1, 2, right? Kind of interesting, actually. I left this out, but that was actually a real range above you that you got stopped out at exactly. But that wasn't the concept, right? It's actually kind of mind blowing. I shouldn't leave this out. The fact that that range's 50% mark is the 24-hour floor is pretty fire. 4-hour floor. So the concept again is simple. We're taking that trade up to that 24-hour floor, and I am just simply speculating at this point on a potential rejection. Now, everybody's still following me here. Now, head over to the right side of your chart. All right, so we know what we're doing here on the 24-hour. This is that 24-hour floor, right? Reincarnated on the lower time frame. It is a rule that when you break out of a structure that you don't want price to come back in. And typically the response is for you to launch price in the opposite direction. That's what that's for. That's what that's for. right? And if you grab hold of a floor, you mean to grab it, right? Which is by pulling back and retesting off of it. So already in my mind, with this big pop or three candles up to the upside, notice three, right? I immediately am again selling my calls, the last bit of my 257s. I had already grabbed 249s over here because I don't want to overcomplicate this, but on a lower time frame before all of this happened, this was the trigger on the lower time frame for price to go and break out to go higher. So we had this there, right? But so again, I don't want to leave the fact that I had calls and why I held them. That was the punchback that I was waiting. But I was looking at the fact that price kept refusing it. So I decided, okay, well, at worst, right, we could potentially go through this box, hit that empty space. I'll grab 249s as like a absolute worst case scenario. They're dirt cheap. I have, relatively expensive calls now. They're worth a decent bit. So I'm going to hedge them, right? Because if we saw some nasty rejection off of this 24-hour floor over here, I expect price to come back pretty quick. Thankfully, thankfully, price gives me an opportunity to see that reversal before it happens, i.e., price leaves above that 24-hour floor and immediately is driven back down to cost basis where it should. We are gauging when we are looking for reversals, and you guys have heard me say this before if you've watched me for any amount of time. We are gauging reversals by what we're able to recover. Is everybody clear on that? So if I want to take something long off of cost basis, it's the previous resistance that I'm looking to break. It's beautiful. It's actually a great part of the system. Taking bounces off of cost basis on return, I mean, it can give you a nice pop. However, you do not. And you are unable, right, for a couple of candles here to go and get that break. What does this provide for me, folks? If I'm looking to go short, what can I use this as? If that's where you go long, that's where me as a, that's right, stop loss. There you go. Sweet. So I now, fuck yeah. So we have a stop loss. We have an area that sellers don't want you to go, and I'm a seller. Now, what else is making this trade a potential? Why would I even look at potentially taking it? How did we get here? No, empty space. Right, empty space. You rip fast, you can't hold what you used, right? This is your protection from falling back here. Remember that. Boxes are guarding empty space. Beat the boxes, get the space. All I need at this point is for cost basis to break. At that point, I give a shit less about what's here. I'm just looking for the price to fly. Yeah. One, two, three candles. Price climbs down. I'm already in position. It does bounce, right? Off of cost basis, goes up to the little bitty baby structure that you created and gets yanked. So I enter, right? I'm not going to lie to you. I had already, we reversed and I grabbed a couple of 254s. And then as soon as we climbed down, that's when I actually took a position because we had closed not only in the box, but we're holding that overhead, which just allows for me to literally sit there with my finger on the market sell button. If needed, get out. Tight spread, market sell, I'm out, right? So I get in off this candle right here, and my stop loss is the overhead break. So again, you can't and I think I hear in a lot of your guys' questions, like, well, how do you know? Or like, what, how did you know it wouldn't reverse? This is this is again a study of how price interacts with one another. But I'm not always concerned. Like, yeah, I am well aware that cost basis is where we could bounce, but it's what's happening up above that allows for me to say, if this breaks, we go here. So I can just get out. And a lot of people have trouble trusting themselves to do that. And so you might be hesitant to get into a position if you can't even trust yourself to abide by your rules or abide by what you said you're going to do. So cost basis breaks, price flushes, moves to the structure and box to our left, and I got out. Do I have a hedge for the upside or only for 250? I did not have any calls. No, I did actually. I think it was, where was it? Here. I had 256 calls for what I thought could be, some crazy end of day reversal, but they were like 3 cents. And that was something where I had just made a bag, right? And let me tell you what I filled at. So let's see, that was 14. Oh, I did, yeah. Okay. So these are, let's see. Sorry, I'm having to search through these. I bought the 249s at 1 cent, sold them at 10 cents, which is pretty fire if you think about it. And then the 254s, where are they at? There you go. I bought those for 5 cents and sold the last one for 105. $5 to $105. And I had a lot of contracts, which also means I had a little bit of risk. I'm spending a fucking fraction. Excuse my language, but I get amped up about this shit because if you are smart about how you position yourself and you get used to how empty space moves and allows price to move, and you know how to set your stop losses, first of all, right? Even if I put $300 into that, right? I'm gonna and trimmed halfway. You're still gonna make a bag. You will be. You will be. Why did I select the 254s? Look, I'm going to make this super simple, my brother. I literally, I mean, I just do what the chart tells me to do. This is structure. The top of the box is 254. Where would you have stopped out if it did not work on the reversal? The top. Oh, like if it hit the floor and bounced back up? Uh, or what are you talking about? Retest previous structure? Yeah, we're literally retesting the structure that we built up and broke from. We left empty space behind. So I mean, again, the concept is simple. This protects you from this, and this is true everywhere, right? Everywhere. Prices, boxes, structure is protecting you from empty space, or keeping you from empty space. So taking this trade and again, I'm able to buy a lot of contracts for half of what a scalper spends. Half, or not even half, a quarter. I can risk less, which takes so much stress off of my trade. I know where my stop loss is. I understand why price has fallen down and can't get back up. Needs life alert, but the ambulance is not coming. So now, is anybody lost here? And this is what I'm doing in slow motion. And this is what I'm doing, which slow motion would be swing trading, longer expiration, right? Or if it's short term, I'm doing the same thing because how am I able to buy for less? Because nobody thinks that it's going to go to 254 at the end of the day at freaking, 150, because volume, right? This kills those contracts. This destroyed those contracts. This killed them even more. So I said, okay, I'm going to situate myself right here at the top. Uh, and again, let me see here. trying to tell you, show, or get the first. I bought. So my fill order says one. I bought some at 130 or 131. What am I? I'm hold on one second. I'm having a brain fart right now. Not 131. I can't stop thinking about price. At 130. Good God. Oh man, I'm so fixated on price I couldn't help but say it as money. Anyway, at 131 I bought my first contracts. I bought 20 of them. I then bought my second lot at 141. And that is right against this wall right here. And then my last fill was at 152. So I literally was just grabbing these $5 contracts, right when it dropped, pass the baton, right here, price backed up, right? And I entered lightly, again, I'm allowed to do that. I entered lightly, and then I added to the trade when I started getting confirmation. And that is also what's called scaling in. Yeah, that is verbatim what that is called. So I scaled into a trade, and as it gave me more confirmation, I added, entered lightly 300%. Oh, that didn't come until later. But I mean, the idea here is, even if it went wrong for somebody who is just learning, it's $5, $10, $20, $50. You know, it's minimal risk, and you get to see it play out, and you can make money. And this is again gonna de-stress. But if you're blowing or putting all your money in, or if you have impulse issues, and where did I decide to sell? I sold. So I scaled out just like I scaled in. I sold at, let's see, fucking military time. 254, 254. Why is this all mixed up? Okay. I sold at what is that? 317? Or no, I guess that was 217, sorry. 217 I sold, which is basically right in this candle right here. Oh, they're backwards, that's why. And at 116, I sold another lot, which is just basically at the end of this candle, literally the beginning of this one. Yeah, that's when I pretty much unloaded on all of them. So I scaled out one and then scaled out two. Cost basis, weekly contracts. No, these were weekly. These were zero days till expiration. What factors helped me consider runners? How price. So look, price plunged into the box, so I let price fall a little bit further. Was I waiting to? No, actually, my target was 254. Look how fast it went. It bounced up and then flushed down. So I really didn't have a chance to sell at my target. I got a gift. Right place, right time. Also, not to mention, that's empty space, right? Inside of the box, which is something to look for, right? How you left or how you bounced will also be sometimes how the way you flush down. And if I'm not mistaken, yeah, you pretty much hit the fuck almost all of it. So yes, you can't get stuck on that one time. Yeah, don't get stuck on that 1 minute. Always relay back to the higher time frame. Stupid. Yeah. So when I say weekly, it's and this is my fault, and I should be better about this. But when I say weekly, I mean I'll either mean on an ETF a contract that expires that day, but usually if I'm talking about a stock, it would be that week, Friday. Okay, and that's my bad. I'm sorry. Now, while I've been explaining this, right, you also just got to learn and see what a punch down is, which is the same concept as a punch up, right? And in fact, this pre-market, and we got to call it a range, although it does have all the makings. This actually was the first area that you saw a green red candle, right? First turbulence. You break it, you ride. Pre-market. Orb. It's beautiful. So I am using structure and obviously the empty space. If you look at what IWM had, right? This is all pre-market boxes, which isn't, incredible as far as resistance is concerned. So I actually had a pretty good stop loss game plan on where price needed to hang out, which means that's my first target to the downside. Yeah, exactly. Exactly. I could actually front run, right? So tomorrow, worst case scenario, right? Price opens up, let's say, price opens up here, right? At the floor. Opens up right here at like 252, wicks down, pulls itself back up, right? I would be using this structure. I could fucking, excuse my language, I could use your pre-market low or our low from today as a place to start speculating, right? I would probably want to see points of contact like that for surety, right? But I also look at this. Do you see all these pre-market candles trying to break the same freaking level? That's a call level. Where's that taking me? Cost basis. Because if I get the floor, I get cost basis. What's above me? Empty space. Where's the target? Here and here. Trigger, stop loss, targets. Does that make sense, everybody? Is everybody following along? Let me get some feedback here. What could I make clear, Buster? Again. So I'll explain this one a little quicker. Okay. Retest of a 24-hour level, right? Which I expect a rejection from every time. Period. End of story. So I traded this up off of a swing and an additional 257 call. We got there. When we got there, that's my floor. See where my box top is? That's my floor. This top of this box is that 24-hour level. You shoot up and you're unable to come back and bounce a normal box and solid price action when you fall that fast, you're going to build, right? That's what would normally happen in a bullish scenario. You get pulled down and you get stuck on the top of that box, which lets me know the baton has been passed. Cost basis is then pushed down to, closed against, and price flushes, loses its floor. I have a target to the downside here, right? With cost basis in mind through this empty space. So I took my position as it dived in, as it retested and retested, and then I made a massive bagarino. So you could have gone short once cost basis was closed. Yeah, you could go. So I think what I'm also trying to make a clear point here is when you find when you're sitting where sellers don't want price to go, you can enter there. And obviously this is where, I mean, yeah, my experience and my ability to react is helpful, but this is also something, and I'm not going to lie to you, I was down here, right? Doing the same thing, marking out my highs. And what is that, folks? A box. What is this? A range. Actually, oops, a range. So what happens? You build a box, you get the one, the two, the three, the one, the two, the three. Price drops down to the bottom of a range, not a box, right? Do you see the clear differences? Does everybody see the clear differences between that and this? It's a perfect example. Everybody sees this. Sorry, I'm making you type so much, but I need to know. So difference, right? So what would need to happen in order for my play to not work? Floor would need to get reclaimed. Cost basis would need to be broken, right? Now I got in this box off of the top, right? So I know that essentially over that high at 256.73, I got to get out, right? It's time to go. And I've got my finger on the trigger to do so. Price hits the floor because it's a range and not a box. It pops back up, retest, and immediately gets faded. And that is where you trade the chart and not your P&L. Yes. Yeah, people get, listen, you got to stop. Yeah. Staring at the P&L is terrible. So what if price retested cost basis of the box? I would still be in. So here's the deal, right? Because I trust that cost basis is always going to respond. If price did pop up off of one candle and hit that cost basis, it's gonna pull back. Even if it's just, you guys have watched me do this, right? Where it's like even just a little bit, you're gonna reject. And so I get, right, the opportunity to gauge how how did you get there? Did you bounce one solid candle? Well, then you better close flat up against it or basically well above that floor because you don't want to you want to get as far away from your retest level as possible. So if you're going to bounce hard and do everything in one candle, you better go. But typically these type of candles without being able to grab hold of something are going to fail. Rock climbing, right? Just like we covered. Price is trying to grab hold of the floor above. If it slips and falls, where does it have to go? So there are tools, right? And the better you get at this, the better you're going to be able to navigate. And I want you guys tomorrow morning to be navigating with me, right? When you ask me for analysis in the Discord, chart it with me. And then when I leave you with the 4 hour or the 2 hour or the 1 hour analysis, dive in and start building because everything can't, especially when you're looking for 24-hour or higher time frame ranges or setups to break intraday, you better have a plan. And the beautiful thing is if you can't see something clearly, it zooming in and zooming out allows you the optics to do so. How was that trade at the beginning of the book? Oh, I must have missed that one. So as you're watching this, do you wait for the clock to count down before you make your move? Like the candle itself to like count, kind of how, well, I guess, Mark, yeah, kind of how like the candle is here, like with a little timer on it and stuff. Yeah, I do. Yeah, I do. I pay attention to how close you are to that candle closing. I mean, I'm also able to, react. I know that if, price is already leaving cost basis and up against here, I'm probably about to get faded. Um, but no, I do watch for candles closing, um, and how the length of time. So if I'm on the 1 minute or if I'm on the 5 minute. Now, you can't for example, like if you try to do that on a 5 minute candle, it's not going to work because that already dumped. So it was important for me, right, to be down on the lower time frame, kind of observing how price reacted on those 1 minute candles, because obviously I would like to see. And actually, I think at this point I was like, it shivered me timbers. That's all I got to say. I was like, oof. All right, better. And immediately, even though I felt emotions, I immediately went right to the chart. What do we need to reclaim? What is above and what is below? It gets hairy. I mean, I'm not going to lie to you guys. Even with this system, it's just always the guardrails I hold on to when I'm about to fall. When I'm about to forget or get lost in the sauce, back to the chart. Focus, zoom in, problem solve. There's no time for fussing, no time for emotion. The emotions don't do anything. They just make you react to things that possibly aren't even real. All right. I don't preset my stop loss. I typically I'm really good about getting out. I'll put my finger on a fast trade like this. I'll put my finger on the trigger to stop out. All right, guys. I feel like everybody, I feel collectively we're grabbing a hold of some of these lessons and they're starting to make sense. You guys feeling the same way, I'm hoping? No stop loss, Garrett. Oh, thanks for helping with our pace. That's what I'm here to do, dude. It makes me look good when you guys do good. You know what I mean? So if it's just, even if it was a selfish endeavor and I just really want to look good, I got to make you guys look good. You know what I mean? But seriously, yeah, it's I I I I know in order for this to be a success or for you guys to be able to see, I can't just move through this shit. So that's one of the issues with buying like prefabricated courses. They're easy to sell, but not always easy to navigate because there's weird intricacies. You know what I'm saying? Yeah, you could share your trade Zella with me. Yeah, for sure. I'll tell you what your problems are real fast. I can see people's bad behavior on the chart. Oh my God. That'll tell me I could probably learn about what you had for dinner that night. off of off the chart, dude, I swear. You don't need therapy, you just need me to see where you got in and out. I feel like I can take my dunce calf off. I'm beautiful. Can you go back to the 5 minute? I for sure can. How can I help? What do we need to see? It's a trade tracking option. Yes. I saw that. I saw that. You can't get away with this stuff. Screenshotted it too. Yeah, if you guys send me your trade zealous, I'll look at them. I actually offered that months ago, and I think I had one person sent me their link. I was a little sad. I'm not gonna lie. I mean that right there is probably the easiest way for me to help you. It's for me to see it. At the beginning, how did I determine the ceiling? At where you couldn't get above previously, right? So even getting down to the 3 minute, it was literally the same box, same overhead, right? And also remember this is that. It's the same. So imagine, right? You grab hold of a 24-hour floor and then you slip and fall and lose your grip there, right? And how did you get there? Really fast. So if you can't grab, right, when you jump real high to grab that, which is what this was, and you can't build. I mean, even if Rogue, even if it was this, check that out. I mean, fuck, I didn't even see that. That was a little tiny range, and you actually retested the hell out of it. The 50% mark on that, but it's equal, right? This same rejection point, 2 wicks right there, these wicks right here. So uh, it's like a in my eyes, it's like, I use the quicksand example. It's like you finally get out of quicksand, your foot falls back in it, right? And at this point, you're exhausted, you start to struggle, and you slip. So, you don't want to, when you leave the trap, you don't want to get your foot stuck back in it. You want to retest, and how you fall is typically a gauge on if you fall fast, you want to bounce. These are levels that will bounce. They should, but it didn't. And then it sunk down underneath the same area that we had to fight with twice to get up, and the 24-hour level. You have to enter all your trades manually with that, right? There are some that you can connect your brokerage, which I would recommend. Some of them you got to pay money. I had a deal with these guys where they were running a discount for people who were in my group, and I basically was sharing their trading tracking platform. But then their platform was kind of turned to shit. So I personally on Robinhood cannot. Uh, I can't help you on that one. So if there's tons of people in here who can, um, but as far as I don't even know if you can put a stop loss. I use TradeStation Buster, and if you download that and switch over to that, I mean, if anybody in here knows how to do that, you can. Uh, but yeah, TradeStation. I don't know how to do that because I don't use it. So all right, so I got a request here to show some trades that we've taken. So I'm going to do that really quickly. And then as I do this, I'm going to also simultaneously explain the punchback. Okay, now I'm going to use one that we've already gone over. God damn, that's blurry. Pixel chart. So these are just A plus plays that the chat or myself have taken. Very clear points of contact. I could probably be a little bit, sometimes I get sloppy too. Right? Very clear. Was it there? Or was it off the floor? Box overhead. Now, with something like this, with as wide of a range as you have, any entry here or any entry, you did build a box around cost basis, which slower moving stocks will do. It's still an A plus setup. And you have empty space up to this floor here. This is a perfect example. It is a little slow motion, but if you'll notice inside of the box, inside of this range, 1, 2, 3, 1, 2, you get a dip down lower, and then you push and rip. So those are problems that you would obviously deal with when you're in that situation. And if, again, you're taking a 24-hour setup, you would be if you're looking at it here, you'd be looking at step one, which is a week, 2 weeks, 3 weeks, 4 weeks. I would say about a month out to 4 weeks out. And you would be totally okay with having to deal with this, especially if your entry is at the top of the box, which it ought to be. So that was an A plus trade that we took. Alta, this was another trade that we took, A plus box, right? You also had this huge overhead, this box. So two boxes stacked on top of one another. So I had two signals. You gapped up to cost basis, chopped up around it, and then you just get a straightforward break going into earnings into the empty space up above. I've got more. Now, this is a classic one. I'll just take you to the chart. This is actually a trade that we took on ELF. And again, what I want you guys to see is how it repeats itself, right? Everything that I do is the same thing over and over and over again, right? We got 1, 2, 1, 2, third, empty space gets filled, right? Now, this is obviously a goofy looking box, but it still has all the makings. Now, we obviously were paying attention to the fact that there were some lower time frame ranges here, but it wasn't enough to actually put a box together, right? The only thing you could really do is kind of put it together like that. That's not a problem because guess what? I'm not trading that. We're trading, there you go. We're trading this, right? A much wider, higher time frame trade. Everything responds the way that it should. Cost basis gets rejected but doesn't lose its floor. You pop up, and then going into earnings, which is just one of the key signs. I want to see that price is still at the levels that people are excited to buy because they're about to get information that could possibly encourage that. And with little to nothing up above you, I made a fat bag on this play. And I love Elf. Elf is one of my favorites, and I will be trading. You guys can go ahead and put this one on your watch list as a future trade again. Actually, I might be watching this one again shortly, depending on what it does here. It looks like it is building da, 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 another box, right? Or maybe even a weekly range. But same thing, same concept, right? Empty space, structure, 122 target. I'm not looking at the comments right now, so just give me 2 seconds. I'm searching for plays here. The good play setup. So this is one that I didn't even take because I freaking hate Verizon. But it is a box. 1, 2, 1, 2. Lose the floor. Reclaim. You see the wick off of cost basis. You break it. You close outside of it. And obviously targets end up getting hit through empty space, which I did not mark on that chart. So my bad. Let's see here. This was also a punch down that was taken, I believe, on earnings. I'm not exactly sure what that was, but it's been a while. You go up, cost basis up above, right? You built a box on the floor, price moves down, hits cost basis, does bounce, does attempt to go grab that box above, and then ends up in one candle closing at the floor, breaking cost basis, and you get a new low through empty space. Right, what are you guys saying? All right, gotta go, Kisby. Yeah, no problem, JW. I love you too. Poppy, what helps me out a lot too is when you narrate the play and you in real time. Usually in the mornings, I'll chart out a play and I'll have a hypothesis of how it might play out. I get happy when it confirms by you. So thank you for that, dude. Of course, and I love doing that. I wish is the NQ is closed, right? Or no, it's not. That's hot dog water though. Oof, they're gonna save this move for the end for tomorrow. I think futures traders need to be watching a potential reversal on this one. Yeah, if this was a little bit more volume filled, I would do this. So, how can I get away with small accounts as day trading? You have to be in a cash account. You should be able to switch that on whatever brokerage. You need to be in a cash account. Do you guys see how this 50% mark of even just this stupid little range is still fighting? Still fighting. I would assume the top of that range would be next. We'll of course, if you guys are in the Discord, I do this every day. So all right, it is 47:50, but I feel like this class was invaluable um in terms of getting everybody on the same page. Damn, pop that. You see how fast it moved? See how fast you moved when you break that 50% mark? Bam. I only see this right here and that right there. Damn, what did I just do? Damn, any future traders in here? You guys see what happens when you distribute the volume? That's literally right there. I mean, even though that's not even necessarily a box. Same thing, right? Distributing volume. Now this right here, that's gonna be hard to move through, but we shall see. All right, guys. Does anybody have any questions for today on what we just covered? Now I'm about to briefly again go through the Potter box and what a punchback is. Um, which I feel like through all of these examples, I think we're good for today. Are you sure? We could go ahead and save it for tomorrow. But I think you guys again, the punchback is the break candle close through the 50% mark. Why is mine moving? Why is what? What do you mean? Be- oh, look. Tap. Is this recorded? Of course, man. Can we explain it again? Explain what again? What? Is your anniversary on 3/15? Yeah, is yours? Are we? You want to gift swap wives? No, I was kidding. Not like I'm not. No, not like exchange wives. Never mind. All right, cut that from the recording. That's not what I meant. Um, no, no, only swing trade stocks. Yeah, I swear to God. No, I mean like you get my wife a gift, and then I'll get your wife. All right, you know what? Look at that rejection off of cost basis, guys. Look at that. Wow. Look. And now this. Oh, I'm telling Peyton, wrong, don't. Nah. But look at the rejection. Oh my God. Maybe this isn't meant for me. If you see the dogs outside. Yeah, she's gonna show me a rejection for sure. Hit me right in the cost basis. All right, guys. Great class. You guys are awesome students as well. I'm glad I got everybody on the same page. So tomorrow we're gonna move quickly, right? I want you guys to do it again. All right. So go out, find more boxes. Make them clear this time, but this time, um, I want you to give me 4 hour and 24-hour boxes. All right. And also, if you see a channel, it doesn't have, this is not a requirement. If you see a channel, place one on it to kind of add to the trade. All right, guys. Y'all have a wonderful night. That was amazing. I'll see you in class tomorrow. We should be getting close to being done by tomorrow because not completely, but we'll be getting close to so Wednesday, Thursday. All right, guys.